Revenue recognition principle. So, what is the revenue recognition principle? We first have to understand what is revenue. Revenue is defined as an increase in resources resulting from the sale of goods or the provision of services. The sale of goods could include a cake business that makes cakes, whereas the provision of services could include a wedding photographer. Now that we know what revenue is, we can define the revenue recognition principle. The revenue recognition principle states that revenues are recorded when they are earned, not when cash is received. It forms the basis of accrual counting alongside the matching principle. Now, let's look at two examples. Going back to the cake business, suppose a customer orders a cake from your bakery. The customer pays in advance in January and receives the cake in February. So, when should you record revenue under the revenue recognition principle in this scenario? Remember, revenues are recorded when they are earned, not when cash is received. Therefore, you will record the revenue in February, as this is when you earned revenue and when the cake was delivered to the customer. This is known as deferred revenue. Deferred revenue represents a liability for a company as a customer makes a prepayment for a good or service that is yet to be delivered. It is recognized as earned revenue as the good or service is delivered. Now, in our next example, suppose that you take photos during a couple's wedding. You perform the service in February and the customer pays on account which is due in March. When should you record revenue under the revenue recognition principle in this scenario? In this case, revenue should be recorded in February, as this is when you provided your service as a photographer. This is known as accrued revenue. Accrued revenue is revenue that has been earned by providing a good or service, but for which no cash is received. It is recorded as receivables to the company, as customers owe the company cash for the goods or services they purchased. In summary, revenue is recorded when it is earned, whether that is under the deferred revenue, as seen with the cake business, or under the accrued revenue, as seen with the wedding photography business.